COSM continuing on a bearish path we've been looking at for quite some time now. Let's go ahead and figure out exactly what could happen for the coming sessions on Monday. What is up, you guys? Thank you so much for stopping by once again on this fine Christmas Eve. This is ARCa coming at you with a COSM technicals, raw price action, and statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right into the charts. Okay, so we're going to look at the immediate short-term time frame first, and particularly with the ARC Crypstex indicators. Okay, so we're going to start off with the ARC DBSI. Okay, so if you haven't already looked at or watched my videos, the ARC DBSI is a statistical indicator that actually takes a score of every single candle printed of the asset's particular time frame that you're in, and it gives you a statistical value. That statistical value is actually presented as a percentage value located conveniently right up here on the top right of your screen. So as you can see, DBSI is suggesting that the bears are leading the way with a 55% versus the bulls at a 45%. Okay, now another way that DBSI does indicate that there is a continuation to the downside is as long as we do maintain below the 13-day exponential moving average, DBSI reads that as kind of bearish. But please do notice that there could be a slight upside first before a continuation to the downside. Now, why can we say that? Well, first of all, DBSI has printed a buy signal right over here in the candle actually from, let's see, Friday. Actually, it was just this Friday that it actually printed a bull signal. So now this bull signal, since we're in the immediate short-term time frame, is very likely to actually come right back up and test the exponential moving average before a continuation onto the downside. I wouldn't consider this to be a large move to the upside, okay, you guys? So please notice that DBSI does have buy and sell signals. This red circle actually signals a sell pressure coming in, so you know it would go down right after that. So this bull signal is here, but do notice that the exponential moving average is right above us. We also do have the 0.236 Fibonacci ratio at 644 right above us as well. So we do have some significant resistance above us that we have to take into consideration before gaining any type of entry. Okay, you guys, I definitely have a lower target for COSM in mind, and I will speak of those targets now, actually. So, but there are, okay, just please know that there are several areas that we need to look at for this support, okay? But first of all, my primary area is actually right over here at this demand zone, located at about, pardon me, by the way, located at about $4.80. Okay, so that $4.80 zone is a very important zone. Okay, we do have also some a secondary support that can be located at about $4.30, and that is the channel's upper trend line. So that would be the support overall. Okay, so we're looking at a support of between $4.30 to about $4.80. Okay, so this is an area that we do need to look for before a bounce, but we need to validate those in real time. Okay, so we'll make sure to keep on looking at those support levels as we move, as I know that there are some of you who are still stuck in the COSM asset. Okay, so let's just go ahead and make sure that we do have that edge for the coming trades. Let's go ahead and take out the ARC DBSI and load ARC Armor. Okay, so ARC Armor now is an indicator that is comprised of several exponential moving averages. These averages are actually placed very close in proximity to each other so that I can create this wave of motion or a directional wave, if you will. Okay, so now in having those, or in acquiring these directional waves, the indicator's algorithm is able to give us buy and sell signals. So we have a long signal here, it went up to there, and now if you can see actually here, this short signal has been presented. This is still honoring a downside. So you know, it's better used usually in the shorter time frames, like for example the 30-minute and the 15-minute. It can go up to the hourly and bi-hourly. I am forward testing the 4-hour, okay, but for thus far, Armor is actually now printing a bearish signal right down here, and that is printed on Friday as well. Okay, so please know that we do have several signals suggesting the downside. Now let's go ahead and get rid of armor because it is a little more conservative. It is a little bit lighter in the suggestions for buy and sell signals. So we're going to go ahead and add the ARC Enhanced Mag D. Okay, so this is suggesting an upside continuation for now, which is very much in confluence with what DBSI is suggesting. Okay, so DBSI, if we can just bring it up one more time, does have the 13-day exponential moving average right above here. Okay, so it is very much in confluence with the NOT 236 in the 30-minute time frame, which is $6.44. We can likely see a touch of that, maybe a wick up just like these right over here, and then a continuation onto the downside. Okay, you guys, so if you do want to get your hands on these indicators, they are absolutely available to you. Please reach out to me and I will talk to you about the subscription packages for them. Okay, now another thing that you should notice is that the subscription packages are actually particular to the indicators themselves. Okay, so if you are purchasing a subscription in TradingView software, which is this whole platform you're looking at, it is absolutely separate from the indicators. Okay, as the indicators are by authors. Those authors are named Crypstex, okay, who have endorsed me and who have or partnered with me. Okay, they are authorized retailers within the TradingView space, so they are able to we're able to take sales and actually give you access to the private list for these indicators. There will be 8 indicators in total. Okay, so yeah, just go ahead and send me a DM and we'll go over those details. So let's go ahead and move on to the next chart. As these targets that we were talking about between let's see, we're just gonna go ahead and refresh our memories real fast. So yeah, between about $4.30 to about $4.80, that target is very much sharing confluence with our daily chart here. Please remember that we were in the 30-minute to 1 hourly chart in the chart before, right? This chart. So now let's look at the daily chart. Okay, so this is the broadening descending wedge that we've actually been writing for quite some time, and now we are approaching these lower levels. First of all, I did talk about reaching the support levels of these tiny little gaps that we had. So this gap is particular to a 12-hour time frame that we actually noticed. Okay, so you can see that we've used it as a support for a bounce, and we are now in that process to continue that retracement. Okay, so I wouldn't call this a full-on reversal just yet. I actually do expect this to be, I mean, in relevance to the time frame, I mean. Okay, so when we're looking at this massive sell-off to potentially down here, I still consider that a retracement or a pullback before a continuation onto the upside. Reversals would be more like, we have this upside coming up to here, and then this happens. That type of this type of movement would be more considered as a reversal. Okay, in this case, I am expecting a continuation of our retracement, and particularly to these targets right here. Please pay attention now. Okay, so we do have this target of this tiny little gap from the wick high candle of November 21st and the wick low candle of November 22nd. Okay, creating this tiny little gap, and the top target of that gap is $4.78, $4.76, right around there, which is very much in confluence with the $4.80 zone that we do have in the previous chart as a demand zone. Okay, now if you were to apply that $4.30 zone at the bottom, where does that land? Okay, so you can see that $4.34 actually has confluence with all of these candles here. We're using this as a direct form of resistance. These are all using it as support, 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 and support here as well. So you can see that it is a pretty important area for us to consider. Okay, you guys. So we could see that wick down into this zone here. In the following days, we've been actually moving very slowly. Volume has come down drastically. Pardon me. So I am expecting a continuation to the downside. And my lowest target would actually be between the 435 and 476 zone. Okay, so this is definitely the area that we're looking at as far as my opinion. Okay, you guys, please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Do your own DD and everything will be just fine, you guys. Okay, we can still discuss this here in the videos or on Discord or on Twitter. Okay, so let's go ahead and move on now to the next chart, as we do have some some more to touch on. Okay, so this is going to be the statistical side of the analysis. This is where we were expecting a 100% move to the upside, of which momentum has invalidated as of December 20th. Okay, so this momentum oscillator is still suggesting a downside, and I do have to warn that as long as we are pivoted towards the downside, this is actually still more favoring the bears. Okay, so this is another reason as to why I keep on mentioning that the 476 to about $4.30 zone is a relevant area of support. My apologies, you guys, if you can hear my little boy right outside. He's not happy that daddy's in here, but it's okay. We're gonna go right back out and hang out for Christmas Eve a little later. Okay. All right, so yeah, as long as we are maintained pivoted to the downside, the likelihood of the continuation to the downside is a lot greater. Please do know that I have back tested this indicator alone, which is called Stochastic Momentum, and it's proprietary to TradingView software. It's a free plugin or a free indicator within TradingView. Okay, so if you do want to trade in TradingView, I do have the affiliate link down below. So I've actually been accepted as an affiliate with TradingView so that it can actually help me out in my future of trading. Okay, you guys, so if you do want to check that out, please do so. Okay, anyway, so yes, please notice that I have back tested this indicator alone throughout many tickers, and I'm getting the lower side of a standard deviation of about 75%, and the higher end of a first standard deviation at about 90% would be the upper end of it. Okay, so, and GTII asset is actually the one sharing that higher end of the standard deviation. So this is not perfect, but everything is still above the 50 percentile. So there is a high likelihood that the continuation to the downside will maintain to the downside as long as the pivot is nosediving just like this, you guys. Okay, so please notice that the volatility is in critical, which I consider to be anything above this 90 percentile right over here, this red trend line that my cursor is over. Now, this is volatility you're looking at represented by BBWP. Okay, so volatility is definitely direction neutral. That's why we have the momentum oscillator here suggesting that bias for direction. Okay, so we are at critical volatility. This is pivoted to the downside. The likelihood of a downside continuation is very great. Okay, let's go ahead and move on to the next chart. Actually, I didn't want to touch on that target just yet, as I do not believe we can reach with the liquidity that we have presently at about $1.69. I'm sorry, $2.69. So let's go ahead and now move on to the last part of the analysis, which is going to be the RSI. Okay, so now this is the 12-hour time frame, and we're going to touch on the divergences first. Now, if you don't know what that is, a divergence in this particular setup is actually the opposition of price action versus momentum, and in this case, momentum represented by this indicator RSI, relative strength index. Okay, I know it says ARC-RSI, but it's very much a standard setup. I just have added some things into the RSI that can likely help, well, me, you know, into understanding the positioning of where we are within the price action against momentum. Okay, so in this case, I do have to express some urgency into this. Okay, so there is these two, let's see, yeah, you actually have three drives of hidden bearish divergence, and they are printing, I'm sorry, regular bearish divergence, and they are printing in the 12-hour. Okay, so that happens when we're getting a series of higher highs in the price action and a series of higher lows in the momentum oscillator. Okay, so in this case, RSI, relative strength index. Okay, so if you are new to the channel, this pink line represents a 14-day moving average, which is standard to any RSI setup. The purple line represents the RSI signal itself, and please do notice that the 12-hour does have the RSI signal below the moving average, which is very bearish, but nonetheless, it's still suggesting some of that teeth grinding sideways trading that we've been facing for quite some time now. Very low volume, very small decline, and slightly bullish, mostly bearish, but very much sideways. Okay, so that's still being suggested by the 12-hour time frame. Now, for the new viewers, please focus in on the RSI properties that I have right over here for you, as I will be be speaking of these properties very often. Okay, so now these 4 zones are actually located right over here. They're just a little bit blown up over here for your convenience. Okay, so now let's go ahead and open up the multi-pane for the RSI, which is the last part of the analysis, and we will call it a night. Okay, so let's go ahead and load up the 30-minute immediate short term for the RSI. Okay, so as you can see, this is definitely suggesting that upside that the enhanced MACD in our first analysis is suggesting, and also the DBSI is suggesting. So we can actually see that the RSI is also suggesting that upside. But please do notice that it's going to be a little bit of a tough trek while we do have that 14-day moving average above us. Okay, the thing is here is that there is likely an upside to be faced. First of all, because we are right at the border between the bear strength percentile and the bear weakness percentile. Okay, usually when we're in these shallow zones, we can expect a gravitational pull into the following zone. Okay, so let's go ahead and now move on to the bi-hourly time frame. The bi-hourly time frame slightly bearish by the RSI 14-day moving average, and the signal itself slightly bearish, mostly sideways trading. So again, some of that teeth grinding sideways trading that we've been looking at for quite some time now. So now let's look at the 6-hour time frame. Okay, so let's just go ahead and shift that over. Now the 6-hour is also suggesting some of that slightly bearish, mostly sideways trading. Okay, definitely that bias for direction is actually just sideways. Okay, so this is why we're getting that slow decline that we're looking at on the hourly, on the 30-minute. Okay, so this is why we're doing this and not capitulating. We're just mostly doing the sideways, a little bit bearish, sideways, a little bit bearish, sideways. So that's exactly what's happening, and it's still being suggested as such. Okay, so let's go ahead and look at the daily time frame. You can see that the daily time frame is actually a little more convincing towards the downside, which is the time frame that I'm actually favoring for eventually meeting the targets that we have been talking about, particularly here between the $4.30 zone to about $4.80. Okay, so in this case, you can see that the moving average is above us. The RSI signal is attempting to move outside of the shallow areas of the bear weakness percentile, if it does go in a little bit deeper, then the likelihood of being gravitationally pulled into this deep area of the bear weakness percentile is likely. Okay, so let's just look at the bi-daily just in case. Bi-daily suggesting definite downside. Let's see, 3-day suggesting downside as well. May be able to use the moving average as support, but that is not a guarantee just yet. Is a bit of ways away. The 5-day time frame is also suggesting a downside. Okay, and the moving average is way down here. So we are likely looking at a multi-day low for COSM coming up. Okay, so in this case, I would very much watch my longs, watch my profits if you are within it. Okay, please know that I'm not a financial advisor. Okay, you guys take whatever I show as just as entertainment. Okay, so now just please, just know that I am expecting that 430 to about $4.77 zone. Okay, so there's no statistics to back that bottom target. I am giving this to you as a discretionary trader, as actually just based on raw price action and a little bit of candle analysis. Okay, now the indicators are also suggesting that type of downside as well, particularly on the daily time frame, bi-daily and 3-day of the RSI. Okay, you guys, so I think that's pretty much it. I think I'm going to wrap up the video here. If you do have any questions or concerns, please don't hesitate to reach out to me. The links will be included in the description below for you to consider joining the ARCa trading community or saying hi on Twitter. Okay, you guys, with that said, I wish you well, a very good night, a great happy holidays. Okay, you guys, and I'll catch you at the bell on Monday. Adios.